Guys, welcome back to the Independent Investor Channel, man. After a couple weeks of a hiatus, just completed our move here, relocation, going on an instinct here. I'm glad to share that journey with you guys. Thank you for the patience on the channel. I've had a few people hit me up, ask me about the move itself. I do appreciate that. Always striking at the community feel here on the channel. If there are problems with the audio, I've got everything kind of dialed back in again. Made some improvements to the channel as well. I was happy to do that. The channel is part of me. I miss doing it when I was gone, but you guys need to understand. I tell you what, if you want to throw a little intrigue in your life, uproot yourself and move. I tell you what, complacency is a luxury. And I was very happy to be in Virginia for 4 years. It was a great time down there. I learned a lot. I evolved. I have evolved as an investor. I evolved in my project. I am reinvigorated as well to continue to offer this product to whoever of the masses wish to come in and share in my unique perspective about personal empowerment and the journey and the perspective that it takes to engage along those lines. But want to give everybody a moment to make their way in here and just say cheers. And it's great to be back. It really is. Grab yourself a beverage. It's fantastic. We just closed out the first half of 2022, which was really a horrendous start to the year. The worst one of my lifetime. It's been the worst one in over 50 years. It's amazing to me how the pendulum swings to such a negative sentiment in the market. And that's what we're going to talk about tonight. And I'm going to stare down the negative sentiment. I'm not sure if I understand why we need to go through these pendulum swings every few months. It seems like either we're in a euphoric state of the stock market or we're in the absolute dumps, and there's no real in between. I think the in between is where we should be looking to take the totality of our focus and our own personal application, not spend so much time paying attention to the swings on the fringes. I challenge you to ask the rhetorical question: are things really that bad? Are you struggling to make ends meet? Just had an alarming statistic come through on the channel through my self-study of kind of preparing for the live stream tonight and kind of reinvigorating in the markets. I've been monitoring markets from a distance. I have not been as intimately engaged in markets, and probably rightfully so. I think it's a page out of my playbook that anybody can take. And, if you're going to be an investor, you need to be an investor through bad times and good times. And sometimes not paying so much attention to it, if you do buy into that philosophy during times of volatility, helps to buffer and put your focus on other areas of your life that are much more important. But staggering statistics that I came through, and I want to share them with you. 58% of people out there in the United States are living paycheck to paycheck. Now, I'd like to challenge what the definition of paycheck to paycheck is. I'd be interested to know what that means. I find in my day-to-day dealings with a lot of people, both in my career and outside, a lot of people have a lot of different perspectives in how they look at their financial health and well-being and their own personal health and well-being. And I find it interesting all the time how some of the happiest people are those people who don't really spend a lot of time focused in on their the goings on in the market, the buying into the high gas prices and the food prices. Yeah, it's very noticeable, and I'm sure each and every one of you guys are noticing the pinch right now, and a lot of solutions are being brought to bear in each and every one of your guys' households with it, which is the right thing to do. It is. It's looking to reevaluate where you can cut back on some of those expenditures that you would take. I mean, when the market's euphoric, people are much more apt to take chances. They take chances on home buying. They take chances on luxury items that they purchase. They are more apt to spend. So this consumer sentiment report that I keyed in on talking about it being at a 16-month low, I found it interesting to go back on historical precedents back to the early 80s, where the S&P 500 has turned back 21,000% since inception. So when we look at it 40 short years ago, which should encompass anybody's short life, we hope long life and volatility to everybody, vitality to everybody who's part of the community. We want to end up as lucky as some of our patrons here that come in and they share their story and they use the empowering message that we put out there to seek an end goal of retirement. And Becky, congratulations! I'm super happy for you and Dawn. That's amazing, and kudos to you. I celebrate success on this channel. I'm one to acknowledge that there's probably a lot of people out there that are looking to enjoy life, get ahead a little bit where life will allow that to happen. Take a little bit of luck where it's there to be had, and the rest of it will rely on hard work. And I think there's a lot of people out there that resort to that as a tried and true method. I'm one of them. I tip my hat to you. If you can rely on luck and you can make it overnight, or you can make it in a week or a month or a year, I tip my hat to you. If you're one of those people that are looking to retire before you're 30 years old, that's lovely. That is not my way. And I tell you what, a lot of success in life is realizing not only what you're capable of, but also being realistic about what you're capable of doing in this life. And I think it's super important to adhere to those fundamentals, those tried and true ways of getting ahead in this life. And, if you're going to rely on anything, I would rather see you rely on hard work and dedication to your craft. You know, pick up on a side hustle if that's your thing. Look, I mean, the question is, do you really want to get ahead? That is the question. Or do you want to try to buy into some of this propaganda that I'm going to share with you tonight in this article? I had to sit back and laugh a little bit. One of the things that really stuck out to me, 30% of wage earners of over 250,000 per household claim that they are stretched thin. Are you kidding me? Stretched thin? Really? Guys, this is why we take on this silver spoon type of reputation as Americans, because it's never enough. It's really never enough. When is it enough? I think those are some of the questions that we need to ask about how bad you actually think that it is right now. And the statistics are alarming. They really are. Worst start to the stock market in 2022 in over 50 years, 53 to be exact. It's been a rough go. There's no doubt about it. And I look at it one of two ways. Either that I can say, look, woe is me. This is not for me. This was horrible timing. This was 5 decades ill timed. I'm just going to get out of this thing and hit the reset button and get out. I look to take a different, more contrarian type of application to market participants as of late, and suggest maybe that you've probably went through one of the worst starts to your investing career. And I think that can be one of the best things. Don't shut this stuff out. The lessons that can be learned through these downturns can be immeasurable. And you might be thinking, sure, Ryan, I mean, easy for you to say right now. We'll reflect back on this time at some indefinite time into the future, and we will realize that this was just another blip on the radar, that happens. And these things tend to exacerbate. They tend to compound. Consumer sentiment, which it is a driver of the market. Look, guys, when people are not spending money as freely as they usually would, because I do agree that 58% of people out there are living paycheck to paycheck. I think they get paid, and I think they can't wait to go and blow it. I really can't. I don't have a lot of faith that there's a lot of people out there in individual households that have net worth to boast. I think when you're climbing the income ladder, I think when you climb the income ladder, there's such a gap between getting to that $100,000 mark. Me personally, I'm not there at all. I've never been there. Yet I boast a $500,000 worth of wealth because I looked at my income as how much do I need to survive? What am I comfortable with? And everything that is surplus or in addition to that is going to be bonus capital. And that bonus capital did not get frivolously spent off and burned off. That surplus capital got put to work in the stock market, and I've been doing it for 25 years plus. So just want to welcome everybody back to the message. Thanks for allowing the hiatus. The move was great. Thank you for asking for those close, loyal patrons to the community. I really appreciate that. Like I said, if you feel like you want to test yourself, uproot everything that you've known in this life and move yourself, move your belongings, put everything that you own into a box. I had the movers, and I tell you what, I want to give a special shout out to movers in this country. If you think you've got it bad right now, or you're one of the people out there that are struggling to buy a box of cereal for 58 cents more on aisle 10, the movers who move people and their crap in this country need to be commended. I salute you. That is the most difficult job that I could ever imagine in this life. I was talking to him, and we have just over 8,000 pounds of crap in our life. Okay. 8,000 pounds sounds like a lot, right? It's like, how do we stack up? Ah, you're an easy job, Ryan. You're good to go. We just got done doing a job yesterday that was 20,000 pounds. I said, what in your experience do people mostly have in way of weight? Not specifics, but just weight. They said most people are around 15 to 25,000 pounds of crap accumulated over the course of a lifetime. And that's why I say sometimes complacency can be deemed a luxury as far as I'm concerned, because it gives us an opportunity to go through some of the things that we don't need, and we do end up getting rid of that stuff. But yeah, just over 8,000 pounds. But the shout out goes to the movers, man, because they got done with our stuff. And they didn't say, hey, we're going home to have a cocktail, or we're going home to relax because my back is aching. No, 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 no. These folks were off to do another job at about 3 o'clock in the afternoon to go and do another job that same day. Very tough job. So the reason why I kind of tell that story, and it transcends, there's a lot of different other examples that I could provide to help people understand that we are lucky. We are lucky. And to lose perspective and to buy into some of these things, I get the statistics. I get it. Why do you think I come up with the Independent Investor channel? I think, in accordance with what Dave Ramsey would suggest, is that if you can't at least attempt to build some sort of wealth and accumulate some level of wealth, even screw up royally multiple times in pursuance of that end in this country, it's on you. It's on you. Okay. Are you in this 58% of people who live paycheck to paycheck? Are you honestly some of those people who can't segue $25 of wealth, $50 of wealth, 75, 100, 125, whatever is conducive to your budget to start on a wealth building pledge, for crying out loud, to yourself, to begin building wealth for yourself? The results are astronomical. And right now people are like, well, the market's going to hell, Ryan. It's all jacked up. What are you talking about? This is the very time you want to be looking at investing. There was not a whim, when the market dipped to 29.6, which was just about 10 days ago. 10. The market's been on a tear, 1,000 points since then. Nobody's talking about it. Everybody is all on this. Hey, we're entering into a recession, which is a possibility. I don't know. I don't presume to know or forecast financial markets in that regard. All we can do is look at, extrapolate the data on what we have now, be diplomatic in our approach. Okay. If you're going to exhibit a little bit of emotion, get a little fight in you. Okay. It's okay. It's all right to look to fight back a little bit on this and say, you know what? Ryan's right, man. There's no reason to display the emotion of irritation or depression or any of those things that are going to prohibit our long-term goals. No way. We want to stay focused on our goals. We want to take advantage of these types of dips in the market, and just under correction territory. It dipped into correction territory at 23%. We are at 19.7 right now, year to date. Is this the tipping point to enter into the back half of 2022 and get back to what I feel is underlying strength in the US markets? It could very well be, but time will only tell. All we can do is establish our independent process, continue to fund markets, and I'm going to give you some ideas about how we can go about doing that going into the back half of 2022. Guys, stay put. Be back with you in just a moment. I had some people pulse in with me. They wanted to know if I was all right or I had fallen off the grid. I upload with some pretty good consistency, and I probably choked YouTube a little bit. I don't bow to the whims of YouTube. If I wanted to take a month off, hell, I would do it. I don't do this project to do daily uploads and feed the algorithm and make that much more, thousands of pennies over and over again until I'm a millionaire. I'm going to do it my way, and I'm going to do it where it feels right. It feels right to do it when I feel inclined to do the project. I've established some things on the channel here that you guys are going to be excited as a subscriber to the message, which cost you nothing, to get my insights on a little bit more broad ranging of a suite of topics here on the Independent Investor channel. I feel like for good reason, we have strayed away from those core fundamental messages. So those will and always have existed on the channel through my old catalog of videos that I've got up over 800 of, and I share openly with the channel. I would invite you to go back and check some of that out, but we're going to be reinvigorating some of those, as my ability to deliver those topics with a little bit different of perspective now, a little bit more of an educated lens, and hopefully the delivery can really get to the core intent of the message, and that's to reach those investors out there who are just looking for some motivation, some down to earth, real grassroots type of I don't even want to say advice, really just motivation to question your own capability, your own goals, your own motivations. Hell, if you don't want this, no problem. Don't pursue it. Don't come back to me at 60, 70 years old and say, okay, Ryan, I'm ready to start now, because time is truly the essence of and the backbone and foundation of a good financially well laid plan. And you can go through ebbs and flows of the market, but those ebbs and flows of the market must, and I do repeat, must be as an investor. They must be participated in as an investor. You have to make sure that you remain steadfast in financial markets during good times and bad. And to bring people to the message early and often has always been my goal, to reach and empower one investor at a time. And we'll continue to do that. So no, I've not fallen off the radar. I've just been uprooting my family and moving to New York. And we've already had some pleasant experiences here. We went down to Times Square. Anybody who doesn't follow me on Instagram should do that. I put some personal stuff on there. It's kind of cool to get to know me. You can enjoy the Independent Investor channel, and you can do so without me selling you a thing. Okay. I do have private groups. I was pulsing in with the private group intermittently through the move. I do occasionally share my insights, especially during volatile times when we've got certain ideas with those opportunities, because there's patrons out there that they want to consume content how they choose. And for them, it provides them that extra step of motivation toward that end for them. Each and everybody needs to be provided their own opportunity to select what content they use and deploy, and it's very nominal. I think you can get into the group for less than a few dollars a month, so it's a good thing. It helps support the channel. All the lights that you're seeing, all the new green screen, it really doesn't speak to the amount of improvements that I've made on the channel here, but it does certainly speak to my devotion. And you guys are going to want to stay tuned for some of those developments on the channel. I do have 2 studios. I had somebody ask me, why do you need 2? A lot of the formats that I do here on the green screen will continue. Some of the screen recording that I do and portfolio reviews will continue in the Tron, the Tron studio. But I'm going to go back to the format of just filming me at a desk. And I think people like that. I think it's a little bit more personal and a lot less robotic. So I'm going to go back to that. And that's going to be my grassroots, touching back on some of the topics, of core fundamentals of building wealth and doing so from a builder's perspective, which is what you should be doing through this volatility anyway. But some of the main items that we're looking at here that are affecting sentiment, obviously inflation's really tough. A 40-year high, that's a tough one. Eric commented on it here. It sucks, but here's the thing, guys. When money is issued like that, I had never seen direct checks to every American. I'd never seen that before. And I knew right when they announced it, we would suffer on the inflation side on the back half. So we cannot be surprised at this, okay? I can only hope, and I do mean hope, and I have my own personal ideas and probably somewhat politically driven to suggest maybe that relief might not have hit the mark as it was intended to, but I'll leave that alone. I can only hope that when people got that relief, that they put it to good work and they just didn't frivolously blow it. I have my own premonition on that, and it's in line with the statistic that I shared with you guys that 58% of people enjoy life, I guess, living paycheck to paycheck. And when you get a paycheck from the government for not working for it, it tends to fall right in that same category as an inflow, and boom, it's an outflow right away. And boom, you've all of a sudden got a 109-inch TV on the wall, and that's awesome. You might be starving to death, but you've got an enormous TV hanging from the wall. So congratulations on that. But to expect that we were going to somehow tiptoe through the garden and avoid inflation is somewhat naive and somewhat irresponsible. For those that study financial markets, it was inevitable. It was absolutely in the cards that we were going to suffer from some level of inflation. And I'm not surprised that it's at a 40-year high. I'm not surprised one bit. Okay. Some would suggest maybe that the pay increases are lagging the increase in prices. Again, I don't want to get too politically charged here, but my wife just suffered from this at her work. The minimum wage went up and they cut the hours. So everybody got put on call, and it was like the day after. So yeah, it was mandated that you make a few dollars more, but the hours got cut. They weren't hiring as much. They weren't bringing in the ample help that they needed because they were stuck having to pay the employees that they had more money. And made them less likely to. Could they have? Sure, I believe that they could, but corporations are going to make decisions, especially publicly traded companies are going to make decisions that affect their bottom line. That's it. That's just what they're going to do. We've known this for a century. This is what companies do. And to be surprised by this is somewhat annoying to me. That's why I love the voice on the i2, because I get to come out and provide my voice. And it seems like to me that the morons that seemingly have all these grand ideas about how to change and, I don't know, build personal wealth for people is to bitch and complain at the government to provide them more when they've done that over the last 2 years. And where has that ended us? Now, I understand we have gone through a pandemic. It's been rough times. I get it. But are we just to suggest that we should throw in the towel and not participate anymore? Are we done with financial markets? Is the stock market over? Are we done? Have we reached our peak? The Dow Jones Industrial Average have reached $36,000, 36,000 points, never to see it again in the history of financial markets. I would suggest perhaps maybe that we reflect on this time like we always have in financial markets during times of corrections, bear markets, recessions, uh, shocks and injects, fundamental shocks, mortgage-backed security crisis, the tech bubble of 2000. Brexit sent a pretty good shock. I remember that affecting my portfolio pretty well. And I looked back at every one of those times, and I'm glad I held true. I held true on every one of them. I continue to dollar cost average the market. Is it fair to suggest that this time is going to be different? It's going back on every fundamental that we've ever looked to take on as a discipline. As we've made an oath to ourselves to enter into financial markets, and we told ourselves, yes, we were going to stay tried and true, steadfast on markets until the volatility kicked up, and then it's like, man alive, this isn't very much fun. Maybe I didn't sign up for this. Maybe I overestimated my risk tolerance to financial markets. I don't know about this, Ryan. Am I going to be okay? All right. And these are all fair questions. You're entitled to feel the way that you want to feel. You're entitled to allow those emotions to come to a head and try to make sense, rationalize what's going on right now. I would suggest to each and every investor out there that's incurring this volatility not to shut this out, because these will be the very times that you reflect back on and you say, you know what? Ryan talks about this idea that it's never as bad as it seems, and it's also never as good as it seems, which would suggest, and this is applicable to the masses, that each and every investor out there, whether or not you're 20 or 50, take on more of a neutral application. A neutral application to fight the very statistic 58%, 6 out of 10 people, 6 out of 10 households, 6 out of 10 in this country of opportunity are living paycheck to paycheck. Doesn't that piss you off? Are you one of those people? I was, most definitely. As you go through your hierarchy, and I talk about it all the time, my hierarchy was affected on this move. That's for sure. It's amazing when you uproot your comfort and you digress and you go back and boom, boom, you don't have a refrigerator anymore to just go get food. So it affects the food category. When you have to travel and you have to incur those high costs of fuel, boom, the fuel area is affected. Now, does that affect my relationship? I don't know. Maybe it puts a little strain on me and the family. Let's be real, right? Moving is never easy. It's not for the faint of heart. Okay. And it's very, very organized the way I do it. So I wouldn't suggest that you do this just for fun. Okay. I had a deep, deep motivation to make this happen for myself. And I feel just as convicted now as I did when I did it. And I'm super excited to embark on this journey. I've never been one of those people that have been afraid to work off of a spiritual instinct. And I hate to get too philosophical with you guys, man, but life, man, is beautiful. I feel like when I read some of these articles and I watch CNBC now, it's as if they really want people to understand that there is no hope. And I'm here to tell you, if you just sit back for a second, listen to what I'm talking about, and it encourages you to do some self-reflection and be like, you know what? God, I'm better off now than I was last year. I'm certainly better off now than I was 5 years ago. And I'm in a totally different universe than I was 10, 15, even 20 years ago for some of our folks that are looking to chip away at some debt. Some of the folks who can earmark when and how they made that first entry into financial markets, right? And you look at those times in reflection and you think, good grief, I'm kind of getting caught up in this short-term deal here. And it's got me down. I've lost focus. I forgot why I did what I did. And it's not to validate my portfolio on July 15th of 2022 or December 15th of 2022. It's to earmark one target date in retirement. And God willing, if I'm there, that's the time to reflect. After the dust has settled and you've done everything along your path to that financial end to build wealth over that time, not to be subject to the short-term whims of the stock market, not to buy into the volatility, to tune into my message that you look at the clickbait stock market crash. I get 1,000 views on these videos. It's great for exposure. But if you sit back and you really listen to what I'm saying, it's all good. It's all good. Financial markets, let me key you in. I'll tune you up a little bit. Financial markets are acting like financial markets. They've acted like this since the inception of financial markets. We've been around just about 100 years. I told you about the 21,000% return in the S&P 500. Wouldn't that have been nice to put $500 to work in the early 80s? Now, I'm not suggesting that we go up 21,000% from here, but we don't need to. We don't need to. The realistic year-over-year rate of return that we're looking to achieve as a retail investor is 8 to 10% rate of return, and do so by reducing the fees and exposure to those fees that are consumed by the very institutions that are looking to take you on as a customer. I would suggest perhaps maybe looking into a better way and employing yourself. Become an independent investor, all right? The best advocate for yourself is going to be yourself. That's the truth. That's the truth. The other unfortunate truth is there's always somebody out there looking to sell you something. Be wary, okay? If you're going to make a mistake yourself, okay? The only person that you can ever blame is yourself. The only person that you can hold accountable is yourself. The very impact that you'll get on those learnings will be far greater felt if they are renderings that are generated from your own personal will. Yeah. Learn. Don't be afraid to learn. Don't be afraid to take a chance. Don't be afraid to act upon that spiritual insight. Okay. If your insight is telling you right now that you want to put a little bit more money to work in the market, fantastic. I'm in line with that insight myself. I really am. I would employ you. Down 20%. Now is a good strategic entry point to the market going into the back half of 2022. Got a little reprieve today in the market. I was down $1,400 on a first look in the morning. I actually went to work this morning voluntarily. I wasn't supposed to, but I had a few claims issues that I was working through. But down 1,400 in the morning, ended up 2,200. That's a $3,600 swing in the course of one day. I'm not suggesting that the market goes up for the remainder of the year. I'm not suggesting that. What I'm suggesting, and I'm going to give you a piece of insight from me monitoring markets over the last 8 to 12. Okay. I know a lot of the rhetoric has been generated in 2022, inflation fears, blah, blah, blah. I started tracking back on the charts, the market rolling off in January of 2021. November of 2021 was where I really said, okay, this is going to get interesting. I'm not selling the markets, but I'm just suggesting maybe that this is going to get interesting here. But as we enter into these markets now, is it fair to suggest that there's a potential there for some reprieve in financial markets? The insights that I want to give you is tracking the markets over the last 18 months has given me the clear reality. And you guys need to listen up. If you're one of the 49 in here, you're going to really want to listen to this. It would have been impossible. And I mean, damn near impossible to pick your points and try to time this market. Disagree with me? Agree with me? If you are one of the 2 million that follow Meet Kevin, you'll disagree with me and say the signs were obvious. The signs were right there in front of our faces. We should have sold everything and just avoided this 20% downturn. I totally disagree with that sentiment. I have seen volatile swings in this market to the downside and to the upside. This 1,000 point give back in the market, I have heard not one whim of any of the talking heads on social media. I have not heard one single talking head on CNBC talking about the bottom at 29.6 bouncing back. Could we revisit that? Of course we could, but nobody's talking about that because it can happen in the event of a light, just a light switch. Boom, it happens that quick. And for you to somehow think that you're going to time in and out of that is absolutely futile. And it's not something that I have been able to really rationalize over the last 25 years of investing. But as of late, these volatile markets, I tell you what, when I first started investing, an up day in the market of 106 points was a big deal. We're hard pressed to make it through a day without a few hundred points one way or the other. And it seems like 5 or 6, 700. Today was a 400 up day. Are very commonplace in this market. I think it speaks to the volatility. I think it speaks to the access that a lot of retail and institutions have to financial markets now. And I think it's something that is the new norm. I do. But to suggest somehow that there's going to be some sort of telltale out there for you to follow, contrary to just buying and holding the market, you're going to have a hard time suggesting that that is a tried and true method over the long term. It's not one that I adhere to. It's not one that I believe in. And it's certainly not one that I preach upon and teach upon to a community that come on and look to revolve around these core fundamentals that have been proven to work over time. And that is a key takeaway from tonight's live stream. What do we do about this? I want to earmark a few things. I mean, I've been kind of doom and gloom, 40 years inflation highs and homes at an all-time high. Graham Stephan would suggest that the used car market is going to be catastrophic for the market. I, I'm a little bit more of a realist than Mr. Stephan. I love Graham. He does a good job. Um, but to suggest that is of interest to me. Spoken like a true American. I'm happy to have two automobiles, and I'm lucky to have that. Both of them are good on gas. I get to haul things in my truck, and my wife, I could get 600 miles out of that car. That Honda Accord is amazing, right? So we've opted for two of the most reliable and economical vehicles on the road. I would suggest maybe mine is a little bit more luxury as a Toyota Tacoma owner, but the Honda Accord is fabulous. I mean, I get 36 miles to the gallon, and it's a dream. I could jump in that car and drive across the country with no worries, none. But I think when we ask the question, what are we to do now when we're looking at financial markets? I want to pose this question to you rhetorically, and I want you to think about this. I think a lot of people look at their lives and they incur success. They move up in their job, they get paid more, they buy more crap. They're one of the 20,000 pound owners, right? Um, I just, um, and they're afraid to digress. Let's think about this for a second. If you're building success the correct way, you should be happy at the bottom of your pyramid and at the top. Okay. And a lot of people, I think I say all the time, you cannot substitute unhappiness for happiness. In other words, you can't say, look, I'm really unhappy at the bottom of my pyramid. I'm going to somehow aspire to something above in my pyramid. And once I get there, it's automatically going, the heavens are going to part and oh, I'm going to be happy all of a sudden. Mhm. And I think in pursuance of that, we're always running away from this perception of ourself or the sheer reality that we are, in fact, unhappy people. Mhm. And I think it's the very fear that people have in pursuance of that end into their future, where they are dead set afraid of digressing a little bit. Having the portfolio retract a little bit in value, that's a great example. Okay. But I've just hit a double whammy in that I took a very comfortable situation, a very, very comfortable living situation that I had, uprooted the entire thing. Family, fortune, during volatile markets, uprooted the employment. I was comfortable at my job, guys, right? Uprooted for the pursuance of something better. Okay. By doing that, all of the comfort elements, the spiritual actualization. I haven't worked out. I worked out once at the Hilton when we stayed here on Staten Island. I worked out once. I got up at normal time, one time in 2 weeks. That's it. Because I've got to, boom, I go back to the basic needs, food, fuel, right? All those bottom line. And I'm not afraid to do that at all. I reach back in my roots. I share with you guys all the time. I used to live on a boat. I was happy to do that. Okay. I was happy then. I'm happy now. But to uproot your life like that and go back to those, you should be able to kind of proceed through and understand that you can't live at that optimal spiritual actualization phase of your own personal attributes of what you're pursuing to in your hierarchy of needs. You can't expect to be there all the time. Okay. I know you get a euphoric feeling from that spiritual actualization. I understand when you have a certain relationship encounter or you have a certain access to those things that really, really make you happy. I get it, but they don't last forever. Life doesn't work that way. Sometimes life doles out a sucker punch right to the face or a kick to the face. And there's a lot of that going on right now, in that these people who are saying that they're stretched thin at 250,000 per household, 30% of those patrons actually have the audacity to claim that they are stretched thin. Therein lies the reason for the channel, my good friends. Therein lies the reason, because perhaps maybe my perspective from the dirt, the grassroots perspective, right? Somebody who makes a nominal salary, somebody who speaks to people like Becky, who have talked about and shared with the group her long earned opportunity to step into retirement willingly and on her own accord. Yep. Who are these fruitcakes? 250,000? You give me 4 years like that, I'm a millionaire, and they're stretched thin? Do they fall into the category of living paycheck to paycheck? Are they the very people who earn that 250 and are just stuck in this comparative game of keeping up with the Joneses of paycheck to paycheck, only to see who can spend the most and put the best car in the driveway when compared to their neighbors? Oh. Those people don't tune into my channel. They don't want to hear me talk that type of stuff. They want to be left alone. It's a sensitive deal to them. Leave me alone, Ryan. I'm good with my erratic and irresponsible behavior. I want to buy a new car every 6 months. Leave me alone. No problem. I'm not your father. But you cannot have it both ways. You want to achieve financial wealth? I am here to tell you that the secret to that is to understand when you are in a digression. Okay. Do everything that you can do to fight, be a fighter. Don't get down on yourself. All right. Um, Acknowledge when you're in those digressions and do not fear it. It's okay to take a few steps back to make sure that you are able to go forward when the time is allowable for you to go back forward again. Super, super important. All right. I want to keep building through the volatility. And I think a lot of people need to take a fundamental lesson from me, and that is to disconnect from your money. Let the shit go, guys, please. Okay. I think a lot of people, these household living paycheck to paycheck, 58%, they're in bed with their money. Now, I'm not suggesting be frivolous with your money. Okay. I'm not suggesting that. I'm not suggesting be cavalier. There would be people who would witness what I've incurred over the last year and say, "You're crazy, Ryan." Okay. All right. You're all entitled to your opinion. If you looked at the amount in my portfolio and you did not look at this starting amount, let's say 18 months ago, you would say, "You're a phenomenal investor," right? And me, I just sit back and let people assess and have opinions. about everything that they think they know about everybody else, and they've lived their entire life with their head in a cloud because they have failed to just look in the mirror for a few seconds and say, you know what? Wow, this guy, he's a little brash. He's ugly as sin. He comes out every single Friday. He talks about something, but he caught my attention tonight because he challenged me to not listen to what he was saying and say the right thing and motivate me to get my ass off my couch and put down the Lay's potato chips. But he challenged me to ask myself some very, very scary questions as to whether or not I want this. Is this something I want to do? Put yourself to a decision. Am I happy? If I'm not happy, do I have the courage enough to change what it is that I've always had the insight or the spirit or the spark or the fire, whatever you want to call it, to try to pursue something? And it's not that difficult. It's not. Becoming a participant in financial markets, seeking out a secondary source of income. I mean, if you guys sit back and you think, man alive, if I were looking at the portfolio as a sole mechanism to my wealth building, make no mistake about it, the independent investor channel is a wonderful mechanism to help buffer. My business income goes into my business account. It's not invested. It just goes right to cash. I'm starting to work on that right now. I have an application in to establish the corporate investing accounts, which, guys, I could teach about corporate structure building because I am learning a crap ton on what it takes to establish business accounts, LLCs, who establish those business accounts. My application for my business account, guys, I kid you not, 64 pages. 64 pages. Registering the LLC, having the documents done up, having the taxation all completed. It's fascinating. I've always been wired for business, always, and it fits with me like a round peg. And I'll share that stuff. I'm building the journey as I speak. This project is a tutorial, but for you guys to do something on the side, sell some of that 20,000 pounds of crap that you own. How do I do that? I don't know. Look into Facebook Marketplace. I've been pretty unsuccessful on that. But Craigslist, we have been successful on, and eBay as well. Get rid of some of that crap. All right? And don't take that money and buy that 109-inch TV and hang it on the wall, okay? Go with 70. I just treated myself to a new one. I got 70. All right. I paid $600 for it. It was a luxury. We said, you know what? We just incurred some damage during the move, right? Uprooting from a very comfortable, saying goodbye to friends, relationships, things like that. All the intangibles that you might think, yeah, it's no big deal. I just uproot myself and boom and go, man, I have a heart to that stuff, guys. I do. I really do. But I've always explained it, and I explain this to some of my most intimate of family members. Um, I will not apologize for my dreams. I won't. And I won't compromise the pursuance of those dreams. I will never do that. Never, never. Spiritual passion to pursue something, right? What that is, I don't know. Hell, I'll let you know in 17 years. I'll let you know. All right. I'll share the journey with you. I really will. But to act upon those spiritual insights, those streaks of motivation that we have as people, that's where the goods are. Okay, it doesn't exist in buying into, oh my God, we're going into a recession. Who cares? Who cares? It doesn't really affect my ability to wake up in the morning and either go exercise and eventually put my pants on, take a shower, right? Have an infinite supply of head and shoulders because I'm beyond that point in my life where the only thing that really matters is the pursuance of that spiritual end. It's the only thing that matters. So all these things that we talk about, are you part of it? Are you part of the paycheck to paycheck? You can combat that by getting a little bit of insight, a little bit of motivation. This is why we do the message, and this is why I'm so intent on the message. I'm so glad to be back with you guys. I really am. Cheers to you guys. Really appreciate you. I salute the audience. I thank you guys so much. I really appreciate the support. It's amazing to me the level of support that you get from people. If you can provide them a little bit of spark, it's amazing to me. and it's worth acknowledging. It really is. I do want to talk about some stocks real quick, what to invest in this market. We're off 20%. I think for the passive investors out there, getting your start in VOO, the VTI, I do own VIG, which is the Vanguard's dividend appreciation. I think they're all a buy right here. 20% down is a good in check for the passive investors. Easy. Monkeys can do it. Piece of cake, right? Put it into a tax protected vehicle like a Roth IRA. Fund it. If you haven't made your max contributions for 2022, maybe you take half, maybe you take a quarter, 25% right now. Put that strategic inject into the markets. Okay. Good stuff. For the growth category, it's very, very simple. There's 5 stocks. Meta, okay, previously Facebook, Amazon has gone through its worst year in a long, long time. It's just incredible. Amazon's really off here. Some of the price targets have it up close to 300, which is a tripler from these levels at $107. Google, which is about to incur its 20-to-1 split. And finally, Salesforce, that's only 4. What would I suggest for another hyper growth? That's good for right now. Those 4 on the hyper growth, they've rolled off. The NASDAQ has rolled off with it. But I think that's good. I think some of the value plays and financials are intriguing here with Blackstone Group. I think Bank of America is a buy here. And I think JP Morgan is a buy here on the single stock, the dividend side of the house. There's much, much more that have kind of really taken it on the chin, and they've come off a lot. There's a lot going on right now in financial markets for the Hyliion fans out there. I'll be dropping the Sunday video. There's a ton to talk about. Fit My Life always talks about Hyliion to the moon. We'll see. I don't know. It could happen in 10 years. It's probably going to fall into the category of hard work. Okay. By the time this thing ends up at something special, we will have worked for it as stock owners. There's no doubt about it. Then again, I catch myself in saying that, and I come back and I say, this is not work, guys. This is not work. This is a commitment to a craft. You take a strategic shot, it works out. Sometimes it doesn't. Sometimes the timing is off, right? So, keep a perspective about this thing, guys. This is stock market investing, okay? This is not used car buying. This is not home buying, okay? This isn't grocery shopping, okay? This isn't buying a stick of gum at the checkout lane at Walmart, okay? And sticking that gum in your mouth as soon as you check out and getting that instant gratification. God dang, that was good. That was money well spent. Yeah, well, you'll never get it back again. Congratulations on the instant gratification, okay? Like that instant gratification. I'll never get it back, right? Terrible investment. Terrible. Okay. But stay focused on your long-term plan. I know you guys have some elements of your portfolio that could probably use some emboldening. Now is the time to embolden going into the back half of 2022. That's my insights during the live stream here, man. Always be funding financial markets. Always. I'm on an aggressive funding pace right now in both my TSP. I'm at about 20% clip right now. I've got about 125 a week going into each of my small M1 portfolios. That's about 250, another 25, 275 a week going into those. Do the math, guys. I mean, I'm at about a $3,000 clip per month right now. I'll probably throttle back just a little bit if I feel like this market kind of recovers and heads back toward all-time highs. If it continues to go down, I'll continue to fund aggressively. I'm winning in either market. I would suggest you take on the same mentality. Be a winner. Don't be a loser. Okay? Be a freaking winner. All right? You get punched in the left cheek, punch back into the right cheek. Okay? Be a fighter. All right? Be your best advocate of your own program, man. It's the only way to be. Do not buy into the propaganda. All right? Be independent and be proud of it. Okay? Very, very simple. Let me cruise to the bottom here. There's a ton of people in the gallery tonight. I thank you for your patronage. It's fantastic. I'll go all the way to the back. I've got Eric. It's great to see you, my brother. Thank you. Blue light special for those that remember Kmart. Yeah, no doubt. I do. I remember Kmart for sure. Yep. VOO CHD is actually one that I'm looking at too. take on in my corporate account if I can get this thing established. It's taken me 3 weeks to establish. QYLD, not so much of a fan, but I do like the triple Qs. I do like the TQQQ. That's a good entry right here at 25 bucks. You want to make a quick appreciation on the NASDAQ that's just rolled off. And I think, tech's going to drive over the next 10, 15 years. So take advantage of the downturn. I mean, we've been waiting 10 years. Try to buy Amazon over the last 10 years on a dip. You're getting that dip right now. Take advantage. You'll regret it if you don't. Mm-hmm. Got about 5 minutes left in the live stream, guys. Been fun tonight. Been fun. Been back. Nice to be back in the pocket. No doubt about it. I'm about 98% of the way, kind of fine tuning the details here. You guys are going to want to stay tuned to the channel, no doubt about it. I'm excited about some of the new initiatives on the channel. Is BJ Freak sharing? Been adding JP, sure. JP and VOO at 350 here. It's a nice entry for sure. Mm-hmm. I've perfect invis, your right passive, VOO, etc. It's good at the stage. It's just easy. It's an element and it's a large portion of my overall strategy. And it's one that's easiest to follow. I would rather see somebody participate in the market in this capacity and no more than not participate. Does that make sense to you guys? So if there's new investors and they're like, I don't know what stock to buy, don't worry about it. Don't buy a stock. Just buy the S&P 500. It's returned over the last 40 years, 21,000%. That's real. Okay. People want to talk all the time about, wasting money and doing whatever they need to do. NYC, I'm in the city. Fantastic. I'll take you up on that, man. Pick a good restaurant. We'll meet you there. We were just in Times this week. We go to the city all the time, man. I drag my kids all over. It's great. Staten Island Ferry is brand new. Times Square is back to normal. I was sitting in Times. My wife kicked in to grab a coffee, and I sat down at one of the chairs, and a concert just cropped up right in front of me. Dude, New York's crazy, guys. I love this city, man. I do. This is not a joke. This is not a joke, man. I Central Park, when I go to Sheep Meadow, right? It's nostalgic for me, man. I've watched it on movies my whole career, and to actually walk the streets, man, to go see Brooklyn Bridge, it's beautiful, man. And it gets a bad rap. It really does. And I've always contended, man, that a part, or if not a large piece of the channel, the heart of the channel is right here. I'm right where I need to be. I'm super motivated. I said I left Virginia with a head of steam, but I'm totally down for that, Hunter. That's great, man. Hit me up. Like I said, we're in the city all the time. We're 10 minutes away from the depot here. So yeah, we kick over there all the time. Let's see if we can get to some questions here in the last couple of minutes. Went from 2 to 1, only drove the second. Sure, you can make some concessions like that. I go to the extremes because it's to discuss why people are in these predicaments, right? There must be a reason for it. And I have 2 cars, but I can honestly say, guys, I sit across from a YouTube audience and I'm about as transparent as any YouTuber out there. There's a lot of people that say, I've been an investor for 30 years and they don't show you smack of anything that they've ever done. And it's like, are you really? Are you trying to convince yourself of this? I'm a pretty selfless person. As a matter of fact, I'm an introvert and I wouldn't do social media if I had the choice. The thing about it is, I don't have a choice in this thing. There's too many people out there that need my help. They need my perspective on this, and perspective can win out. It doesn't mean that because you went from 2 to 1, and I commend those efforts. I do. If you're trying to cut back on the budget, it's great. It shows that you're willing to take a shot and do something to avoid this very statistic that I pointed out at the top of the live stream. It's appalling. It's just appalling. And Dave Ramsey would agree with me on this. There's no excuse for it. There's no excuse for it. The only person that you have to blame for it is yourself. If you had somebody like myself sit down and dissect your budget, I would probably puke on it. And then you would puke on it because you would see it with my lens. Yeah. You'd be like, I'm a complete disaster. And I had no idea. I thought I was financially savvy. Those are the worst ones, those people out there that live paycheck to paycheck, but they think that they've got it licked. These people that make $250,000 and can't identify a little bit of surplus capital, to put away for themselves, no excuses. You get zero sympathy from me, zero. And the more net worth I grow, the more is going to be a disconnect between those people who should have and don't, and the people like myself who should not have and do. That was a cool thing I just said, if you listened to it correctly. Yeah, yeah. Separate yourself. Am I on the path of validation for the program that I'm so adamant about discussing every single Friday? Yeah, it becomes more validated. Now, it's hard to justify in the short term and say, yeah, my program is great. Portfolio is digressing. Like I talked about this evening, it's taking a step back. Okay. But over the long term, I'll whip that ass. You're not going to catch up with me. I don't care how much you make a month. I don't care how much you make a year. If you're of poor discipline, you will not catch me. Take it as motivation. If you think you can, game on. I've been at this gig for 25 years. I don't come from money. I identified this a long, long time ago as something that I had to do. I didn't have a choice. I didn't have a choice. Will it work out? I don't know. Will the market, has it seen its better days? Has it seen its best days? Will it ever see 36,000 Dow points again? Did we reach its all-time historical high, never to be seen again? I don't know. Perhaps. Who knows? I don't live my life with my mind affixed to a number. I think it's pathetic. I think you would find and you'd be refreshed at how simple my objective is from day to day. Take care of my wife, take care of my kids, support and provide financial security, pursue my end. That's it in a nutshell. Pretty simple, right? All right. I'm not affixed to a number. I'm not asphyxiated to it. I don't get down when it goes down. It's pathetic. Get over it. Don't be such a bitch. Stop whining. If you're living paycheck to paycheck, fix it. It is fixable. As much as you've got your head lodged up your backside and convinced that you cannot change yourself, I'm here to tell you that you can change. Okay? And you better become privy to this fact, because it's going to be that much more apparent later on in life that you thought you had it under control when in actuality you did not. Lifestyle creep is a scary psychological game. I agree with that. That's a smart statement. Very smart. Thank you. Julio's in the house, man. I got all kinds of cool people in this community, man. You guys are freaking phenomenal. Freaking phenomenal. Like I said, man, it's not a me lead and you follow. It's just we come in and discuss stuff. It's cool. It's cool. I put you guys first. It's my job to administer the business, man. It's all good. Nobody delivers the goods like me, though. Nobody. I'd love to watch a channel like mine that comes on and talks about the stuff that I talk about as intimately as I do. I believe wholeheartedly the stuff I talk about, man. But I believe you're right. I believe lifestyle creep, especially in this consumer-driven society, is a tough one. It really is. I think people become victims of their circumstance. They become caught up in the hype. We're going to go for a few more minutes later, so stick around. Don't leave the live stream, guys. I'm feeling saucy. We'll go another 15 minutes or so. I'll do an hour and 15 tonight, just to make up for a little bit of downtime. I'm back in my pocket. I'm back on the left side of my brain. Finally, I've been on the right side of my brain and mostly my back for the last 2 weeks. I tell you what, man, moving is like a backbreaker. And then you need like a day to recover. I'm a tough guy and I need like that little bit of time to recover, man. It's holy moly, man. Again, I salute the movers. It's not for the faint of heart, man. It's a tough deal, man. It is a tough deal. And Tim, I also have Marcus couldn't log in this week, set up for a VPN that was there for issues. Interesting. Those high interest savings accounts, I would warn each and every one of you guys to make sure that you're not being victims of a teaser rate only to be lowered. See, interest rates on these high yieldings should be going up incrementally. Unfortunately, the financial institutions, they control that as well. And you notice the borrowing rate is significantly higher than the payout rate. So I don't trust the institutions, man. It's a tricky one. I'd rather go with a nice dividend ETF, or even bonds right here with their historic sell-off probably look more attractive. But from if you wanted to actually double that yield and go ahead and get that 3% yield, go ahead and enter into bonds right here. My bond portfolio, some of those bond holdings, I think medium-term bonds are off 20%. Historical downturn in the bond market. That is of interest to me. And that's a place right there, to start to add a little bit. Add a little bit of segue into the bond market. If you want to add a little bit of fixed income to the portfolio, please do so. I just want to earn a little extra money. Have sitting around doing nothing. Well, that's a fundamental approach to the markets that's worth taking a moment on. I think if you've got a wad, whatever size that wad is, right? Doesn't it make more sense to have that money working for you? And you think, well, if I invest it and it goes down, that sucks, Ryan. Not really. Not really. Remember the two, okay? So you can't have it both ways. Either you sit on your money neutral in a savings account earning nothing, okay? Or you put the money to work. To be eligible for capital appreciation, yes, subject to capital depreciation. But the idea there is that you put that money to work over the long term, and chances are at some point you're going to get a hot streak, and you're going to get on one of those streaks of the S&P over the last 40 years, turning back 21,000% for those investors. And again, you don't need to do anything near that. You just need to keep your money in the market to enjoy what has been historically proven over the last 4 decades, and that's to go up and to the right, irrespective of any short-term volatility that you can incur in the short term, that of which we're going through right now, which, yeah, I have my own personal feelings about it. It's been pretty quick. It's been pretty violent of a downturn, but I think every bit of it's justified. I think every bit of it, I do. But I do suggest that the underlying strength in the economy, it's funny when I go out in the city, there's people spending money hands over fist, man. There's tourists want to come to at least this city that I live in now. There's people want to buy houses. There's people that acknowledge the importance of establishing their own personal domicile. The pandemic has taught us that, the real value in that, and that value is being re-rated. Right? People are willing to pay more for that personal domicile, right? So, all things of interest to me as we continue to observe and monitor financial markets going forward. But it'd be anybody's guess to see where we go. Mm-hmm. Mm-hmm. So this is a bit east of California. You do not strike me as a Californian. You do not. It's too damn expensive there, brother. I don't know how people even live there. I don't know how people live here. Remember, I'm getting a lot of assistance from the government to plant my ass here in Staten Island. So I don't know how normal people make it. Me and my wife, we're baffled. And we're baffled because we are disconnected from our money. Yes, we could fall on tilt and maybe go and buy a driveway here for $500,000, but we just shake our heads sometimes, and we don't understand how regular people afford. You want to know expensive groceries? Come here, run a grocery bill with me, man. I'll show you how crazy it is. Use them quite a bit in my bit. Yeah, I was talking about that. Yep. Always eat right and exercise. You betcha. Appreciate that. I got to get back on the bandwagon, my friend. Trust me, I went all the way down to the bottom of my pyramid over the last couple of weeks. It's been an interesting ride, and you don't enter into that objective to move your family. As short as it was really just about getting everything transferred, valuables, things like that. We do have some sentimental value in some of those 8,000 pounds that we carry with us. So it's interesting, and you never know how it's going to turn out. That's the interesting part, is every time you open a new box, you're wondering whether or not you're going to open that box of significant damage. And we got it was pretty good. It was pretty good, and thanks to all the people who reached out and was inquiring about how well the move. I really appreciate that. It meant a lot to me. Jared's in the house. Jared's been with me since the first stint in New York City, and now he's back for round 2. It's great to have your continued support here. It's great. Is your highly on 22? Yes, it is. My price target doesn't change on the stock. It doesn't change. See, here's the thing. I'll run these examples. I don't want to segue too much at the end of the Friday live stream into my highly on figures. But I'll just suggest that these 10 orders that they're getting, it's not the 10 orders that are of interest to me for NFI, who owns about 4,500 tractors, family-run business, 90 years, et cetera, et cetera. What is of interest to me is, can Hyliion segue into 10% of that business, which is 450 tractors? Okay. On the high end, 25% would be around 1,125 trucks, right? I'm doing that math off my head. But at 1,125 trucks, we're talking about $100 million order, right? Which is close to their operating cost break even, that kind of that critical mass that I speak about all the time, potential with one operator. That's 25%. Now, that's assuming that they go no place else for the solution. I'm really excited to talk about this, and the partnership or collaboration, whatever you want to call it, with Cummins was explained by the boss himself. Thomas Healy explained this, and he said it really, really fast. And if you were paying attention, you could profit from it. What he said was that they were going to help with the CARB and NHTSA certification, right? That was going to be the eligibility criteria for customers that buy from the OEMs. That's the key. Okay. So the question really right now isn't to focus on, now there's a lot of positives with NFI putting in a 10 order for the ERX this early, even before certification. They went down there, they drove the product, they believe in it. Obviously, it's a great thing for them. That's not the point. The point is, if NFI doesn't buy another Hypertruck ERX from Hyliion into the foreseeable future, the stock is in trouble. The company is in trouble. And that's where your bet lies. Is this a segue to something better, or is this a one-off? And it's your bet. It's your bet. You're entitled to your fundamental application when it comes to this speculation piece of the company. I love what they're doing. They're building out their order book. It's everything that I said. I challenged NFI, was one of my bullseye innovation council member, and boom, out of the blue, they come up with an order of 10. And they were the ones that were secretive about their ride and drive because of competition. They don't want competition to know where they're going, how they're going about doing their business until the time was right. The timing was right. I still believe that it's early in this game. But remember the numbers that I talked about, okay? That's just one fleet. 10% on the low end is 450 tractor trailers. That's about 900 million, right? Excuse me. At the 90 million on that order, okay? And then the 450 tractors at 10% and the 1,125 puts us in that range of providing operational costs for the entire year. That's with one operator. Where do they fall in that? Do they fall under the 450 at 10% and only garner 2% of NFI's business? We don't know. And that's the revolving piece, is you have to understand that these tractors that are coming off of the line are coming off every single year as they rotate the old tractors in the fleet and introduce the new tractors into the fleet. I'll be talking about this in much more in-depth on the Sunday release of the Hyliion video. It'll probably be another 60 minutes. I know a lot of people get pissed at me and blah, blah, and they don't like it. And they want an 8-minute, hey, buy this, you'll be a millionaire overnight. I'm invested in this company. I don't care if it takes next year. I don't care if it takes 10 years. It's no problem. This is the company that I want to be invested in. I look across the landscape, and this one makes the most sense. It makes the most sense. And companies are validating that. Cummins has just validated that. Wholesome, just in the last month, has validated that, to where these companies are really looking at this and saying, I can go green. I can go with a net negative potential with RNG. I can run CNG. CNG's trucks are becoming the new norm They're becoming more integrated into the fleets, and Hyliion just seems to be the logical solution to that. So yeah, my $20 to $24 price target will be revised once it gets up to about the $16 mark, which I think it's extremely undervalued right now. It's sold off at the rest of the market. The rest of the EV market has sold off. 𝑪𝑎𝑛𝓋𝑎 is against the grid. They've extended their vote for the Class A shareholders. That's hurting the stock because they're correlated, Hyliion specifically. And Hyzon has really rolled off. It's now below Hyliion at just a couple bucks, $3 or so. And so with the entire sector is really sold off. And I think there's better times into the future as I think market conditions improve. And I think some of these more speculative names and forgot small cap names, which I didn't mention tonight, but Palantir has almost doubled off of its bottom. And nobody's talking about that either. So there's opportunities out there, guys. Just have to keep your, keep your head about you. Keep looking and earmarking those opportunities. Stay hungry. Don't buy into the madness. There's always things that can be looked at in financial markets. But we're going to wrap it up. Thank you so much for the patience over the last couple of weeks. Really appreciate you guys being part of this core community here. I'll go back and review the comments. I do apologize. I didn't get a whole lot of interaction, but we will be back next week on the Independent Investor channel. It is the fastest 60 minutes on YouTube. Got a little bonus time tonight at about 75. I was in my element. Glad to be back with you guys. This is part of my lifeblood. Glad to share my insights with you guys. And hopefully it empowers each and every one of you guys to be stronger, to be independent, to ignore the noise, and to build your financial future now into the future and help ignore some of that volatility that we're incurring in the short term. Here's to better times in the latter half of 2022. We'll be back next Friday on the Independent Investor Channel live stream. Be well, guys. We'll catch you next week.